Do you think it's better for you to set the format, or should I go through the ideas and the questions I have here? What would be the best use of the time, do you think?
I think both is good. Let me just, I guess, start off with the first of all, is the market opening above or below the previous day's range? That's the first foundation.
Oh.
What has been maybe your biggest challenge in trading, or is there a few of them, or what are the things that you struggle the most with?
Yeah. I would say at the moment, and this wouldn't be a surprise, it's the tool. The software I'm using, I've missed some trades. I was following you, but I think it's simply mechanical right now. I understand the principle. What I want to do is enter a trade consciously and with the trailing stop at least.
Right.
And when I put the order in, I go, wait, I'm looking at my different screens.
But yesterday's chart next to today's chart is absolutely critical. So,
okay. Oh, that's good to know. And I'm also getting the sense that the real power of this platform will be that I can arrange a whole bunch of repetitive processes as a template. And so I can drop in the next stock. What I would like to be able to do is enter a stock, and as it starts to climb up, say it goes up 30 cents, that's where...
Once the first order gets filled, you automatically have the trailing stop or the hard stop that you specify ahead of time attached to it. Yes. So it's kind of set it and forget it, which is really neat. So this is how I've done up to maybe 115 trades daily with this approach, and it makes it very, very easy. It automates everything, so it's extremely simple. Very good.
So if we break this down here, Ken, you'll enter the position at an accomplished price of 23.20, and as soon as that order is triggered, there is a trailing stop to sell back out of the position at 22.70.
Correct, right. Now that's actually that's too wide. Normally I use like a 10 cent or 20 cent trail, but you're exactly correct in this example. That's right.
Yeah. And so this interface is much clearer than the one I'm looking at on my platform.
And that's the skill inventory I would encourage you to in any trader, to kind of pay attention to what you do. And I'm not going to spend any time on this or read it or anything, but it'll be in the recorded video, and you can go back and screen cap it later. But
try and screen grab this. I think this is great. One of the questions I had for you is when we observe you trading, and I'm curious as to what's going on this screen, because I still haven't broken down this e-signal yet, but are you behind the scenes? Are you on another screen running indicators and tools like MACD and histograms and that sort of thing?
Or no.
You're not. So you're just trading on what you see on these charts. You've got
exactly
volume. Right. Wow, that's interesting.
You don't need squiggly lines. No, you don't need squiggly line indicators. They're worthless. What you need is range, volume, volatility, lengths of runs, that kind of thing.
Well, I think with a lot of this, I'm going to find my niche and my style as I get more experience.
Right.
But I have absolutely no problem with swing trading at the same time. And I think what I'm learning, because I'm taking notes as we're in the trading room with you, I think I'm learning that you kind of have a flexible view. If the circumstances change, you'll say, this is worthy now of consideration as a swing trade, and you may just want to stay in there. I'm not for or against either one. I think the tool is to build wealth over time with hard work.
What you'll find on this journey is you should really practice as much as you can, as cheaply as possible, and accelerate your learning curve. And the only way to do that is to roll up your sleeves and put the time in. Like I did 120 odd million worth of trades last year, real money trades. It's thousands and thousands of trades, so that I can be a better service to everybody by the lessons learned that I pick up and what works and what doesn't. So I would, learn like 1, 5, 10 shares at a time. And you're not going to make a lot of money when you're right, but you're not going to lose a lot when you're wrong, which is the most important thing your first 5 or 6 or 7 years. So I actually am an advocate of that, especially if you're like your first 5 or 10 years trading. I think that's wonderful. So yeah, use a cash account, settled funds only, slows you down, or at least makes you use smaller size. So that's actually a good thing. So yeah.
Okay. Yeah. I guess because I'm older, I'm in my 60s, I'm kind of starting off with, well, the smallest position I'll probably put on is $400 or $500, but then I'm quite comfortable doing $1,000 or $2,000 entries. It doesn't faze me.
Yeah,
so
yeah.
that's why
Yeah.
I'm cycling through this money pretty fast.
Well, thanks, Grant.
Yes.
It's been a pleasure, man. You're a smart guy, and I enjoyed talking with you. So thanks.
Thanks, Ken. I expect I would want to try to do this again with you in another couple of months' time, at which point I'll have a much more focused set of questions,
Yeah, sure,
at that point I'll know what I'm doing. So thanks again. Look forward to seeing you at the market close.
Yeah, well, I will be there. All right, well, take care, and thanks for being here.
Thanks very much, Ken.
Thanks.
Bye.
Bye-bye.